I am Dr.S.Thenmozhi, Department of Commerce CA. Now we are going to see the subject income tax. Tax is a compulsory payment or contribution by the people to the government for which there is no direct return to the taxpayer. A tax is a good system should not affect the ability and willingness of the people to work, save and invest. Tax is a compulsory contribution. We can't escape from the tax. Types of tax. There are two types of tax. One is direct tax, another one is indirect tax. Direct tax is paid by the person on whom it is levied. In case of a direct tax, the impact and incidence fall on the same person. It is borne by the person on whom it is levied and cannot be passed on to others. Example for direct tax: income tax, wealth tax and gift tax. In case of an indirect tax, the impact and incident fall on different person. It is not borne by the person on whom it is levied and can be passed on to others. Example for indirect tax: excise duty, sales tax, service tax and custom duty. Rates of tax for the assessment year 2015-16. In case of an individual up to Rs 2,50,000, there is no tax. 2,50,000 to 5 lakhs, 10% tax. 5 lakhs to 10 lakhs, 20% tax. Above 10 lakhs, 30% tax. For senior citizen up to Rs 2,50,000, there is no rate of taxation. 2,50,000 to 5 lakh, 10%. 5 lakh to 10 lakh, 20%. Above 10 lakh, 30%. For super senior citizen above the age of 80, they have to pay tax. Whether they are earning 5 lakhs, there is no tax. 5 lakh to 10 lakh, 20%. Above 10 lakh, 30%. Basis of charge: in case of a tax, it is levied on the total income of the assessee. Under the Income Tax Act 1961, the total income of each person is based upon their residential status. Under Section 6 of the Act, divide the assessable person into three categories. One is ordinary resident, second one is resident but not ordinary resident, third one is non-resident. Type of residential status: for individual and HUF, and we can classify firm, AOP, local authority and other artificial judicial person. Individual can be classified into three categories: ordinary resident, not ordinary resident and non-resident. Firm, company, AOP, POI and local authority is classified in two categories: resident and non-resident. There is no not ordinary resident category for firm, company and AOP. For condition for ordinary resident: if a person, whether he is ordinary resident, he should fulfill the following condition: he was in India for a period or a period total to 182 days in the relevant previous year, or he was in India for a period 60 days in the previous year, or totally 365 days in the preceding 4 previous year, and he must be resident of India at least 2 out of 10 previous year, and he must be in India for 730 days in 7 preceding previous year. Whether a resident, he is resident but not ordinary resident, he should be in India for a period of 182 days, and in the previous year he should be in India for 60 days, and preceding 4 previous year he should be in India for a previous year 365 days, and he was non-resident in India for 9 out of 10 preceding previous year, and his total stay was less than 730 days during the 7 preceding previous year. In case of a non-resident, under Section 2, Subsection 30 of the Income Tax Act 1961, an assessee who does not fulfill any of the above two conditions given in Section 6, Subsection 1A or B would be regarded as non-resident assessee during the relevant previous year for the purpose of Income Tax Act. The scope of total income: for resident, under Section 5, Subsection 1, scope of total income of resident is Indian income plus foreign income. For not ordinary resident, Indian income plus one particular type of foreign income. For non-resident, he has to pay only tax for Indian income. Total income under Section 14 of the Income Tax Act, it covers 5 heads: salaries, house properties, profit and gains of business or profession, capital gains and other sources. Concept of total income: salary plus house property plus profit and gains of business or profession plus capital gains and income from other sources, carry forward of losses. We can avail deduction under Section 80. deduction under section 16, deduction under section 24, and deduction under section 30 to 37 for profit and gains of business or profession, and we can avail deduction under section 48 for capital gains, and for other sources we can avail deduction under section 57. Salary, we can compute salary by adding allowances, perquisite and profit in lieu of salary, out of which we can deduct entertainment allowance and tax on employment. We can get income from salary. Second head of income under the head income tax is income from house property. The income from houses, bungalows, building, godowns is to be computed under the head income from house property. The income under this head is not based upon the actual income from the property, but on the notional income or annual value of that building. The annual value of the building consists of any building or land apparent thereto of which the assessee is the owner, other than such portion of such property as he may occupy for the purpose of any business or profession carried on by him, the profit which are chargeable to income tax under the head income from house property. Under the head house property, we can avail deduction. For let out house property, there are two deductions. One is standard deduction under section 24A, another one is interest on money borrowed under section 24B. In case of a self-occupied house, only one deduction can avail of an individual, that is interest on money borrowed under section 24B. Standard deduction, under the head standard deduction, for let out house property or deemed let out house property, 30% standard deduction. In case of a self-occupied house property, there is no standard deduction. Third head of income is profit and gains of business or profession. Under section 28 to 44 of the Income Tax Act 1961, profit and gains of business or profession form part of total income of an assessee. Under the head, what is meant by business? Business means any economic activity carried on for the purpose of earning profit. Under section 2 subsection 13 has defined the term business as any trade, commerce, manufacture or any adventure or concern in the nature of trade, commerce and manufacture. Profession means it is an occupation requiring purely intellectual skill or manual skill controlled by the intellectual skill of the operator. Example, lawyer, accountant, engineer, surgeon and authors. Fourth head of income is capital gain under section 45. Basis of charge for capital gain is any profit or gain arising from the transfer of a capital asset effected in the previous year shall be chargeable to income tax under the head capital gain, and shall be deemed to be income of the previous year in which transfer took place. The above definition can be split into two parts. One is income arising from the capital asset. It should be in the previous year. Types of capital asset. There are two types of capital asset. One is short-term capital asset. Another one is long-term capital asset. In case of a short-term capital asset which is held by the assessee not more than 36 months. In case of a long-term capital asset which are held by the assessee for a period exceeding 36 months. Tax on capital gains. For short-term capital gain, the tax rate is 15%. For long-term capital gain, the tax rate is 20%. Income less than 2,50,000, there is no necessary for payment of tax under the head capital gain. More than 2,50,000 for an individual, he has to pay tax under the head capital gain. In case of a senior citizen, the limit is 3 lakh. In case of a super senior citizen, the limit is up to 5 lakh. Fifth head of income is income from other sources. Under section 56 of the head income from other sources, every income which does not specifically fall under any of the preceding four head will coming under this head. The following are the income under the head income from other sources, that is dividend, winning from lottery, crossword puzzle, horse race, card game, gambling or betting, interest on securities, income from machinery let on hire, value of gift exceeding the value of rupees 50,000. Rate of TDS, dividend on SAS under section 150, that is nil, interest on UTI and mutual fund nil, bank interest 10%, interest on security issued by the central government nil, local authority or statutory corporation, the TDS is 10%, for company, for listed security, the TDS is 10%, for unlisted security, the TDS is 10%. For winning from lottery, races, puzzles and card games and TV game shows, the TDS is 30%. We can compute total income of an assessee by the following way. We have to add the 5 head of income, that is income from salary, income from house property, profit and gains of business or profession, capital gains, income from other sources. We can get gross total income, out of which we can avail deduction under section 80C to 80U. We can get the total income of an individual. Thank you.